This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. And again, I'm just back from vacation. I just scanned through some of these charts before, so I might be a little tentative in terms of the price levels that we are using, so bear with me within the next day or so. I should get right back in the flow. So looking at the Euro Pound, this is a daily chart. What I see here is just clear resistance near that 87 figure, so that's something we can look at. Right now price is at 86.20, so certainly over the next 24 to 48 hours I would use that 87 figure. I'd have a tentative bearish bias against that level. On the flip side, we could have a breakout to the upside, which would be confirmed with a daily close above that level, at which point a long trade would make a little more sense. But again, let's give this another day or so, see exactly how this price level plays out. The next chart is the Aussie Kiwi, and prices did come down to that 124 figure, actually closed just beneath that 123.70 low, but then we did have a rally to the upside. Hopefully you didn't lose too much if you did enter that trade. It was a little bit tricky. If we zoom in here, so this was the price level I was speaking about, and to have a close beneath that level, about the 123.72 area, and we can see the slight closes just beneath the level, these candles over here, and then we did have the rebound to the upside. The next chart is the Pound Swiss, and not much has changed here either. Still waiting for prices to come down and test the longer term support line. We can see prices right now about 176.65, and this line is located right now just beneath that 174 figure, so this is something we can look at. Let me zoom in a little bit here, and we can also use this candle right here. This would be considered a hammer candle, and we can use the low of that candle as a reference point for our long trade as well. Ideally, and this is something, things that I like to look for like this are trades that set up a few hundred pips and a few days in advance, and this is the case right here. So if prices can come down and test this price level is about 173.90, and if they can come down and test that area, again we have the former support from the low of that hammer candle as well as the longer term support line. That would be a double confirmation of support at that area, so that again that should be our target to enter a long trade. This trade could materialize within the next I'd say 48 to 72 hours. The next chart is the Euro Swiss, and this is the longer term resistance line that I've been using for the past several months now, and we can see the prices did come down. I was expecting prices to come down and test the previous resistance line, which should now act as support. We did have a few closes beneath it and then a rebound similar to the Aussie Kiwi, although this line is a little cleaner than that Aussie Kiwi line. So moving forward now, hopefully you weren't stopped out on this slight breach of the former resistance line, which is now acting as support. If you are long, what we can do, and this line kind of just popped up at me as I was speaking, is this longer term line right here in terms of support. So right now I would have a bullish bias against this simple support line. I like this line here, and I think at least once you'll see at least temporary support off this line, and this line is located right now just beneath that 152 figure, so certainly within the next 24 to 48 hours trade setup on this pair is possible. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.